If your one issue is, I don't have enough money saved, that should never be an issue for a first-time home buyer because of these programs that are out there. So most people think, oh, I have to put 20% down. No, I can do a conventional loan, 3% down, and get this grant money. Like I just spoke to a gentleman looking at a $450,000 house, getting $22,000 in closing cost assistance. So there's money out there that literally will cut in half how much money he needs. And then, as an agent, potentially days on market, you may be able to get a small seller concession, $5,000 or whatever. You may be able to get in the house with, $5,000, $10,000.
Out of your own pocket.
Out of your own pocket. So that's not a thing. The biggest issue I see for people is debt to income ratio. That's the biggest issue.
Yeah.
Because if they're a one person, hey, you may not be able to afford that $450,000 house. If you're one person, that's where you need, two people to buy. So that's the bigger issue than money. And then generally people, hey, you pay your bills on time, your credit's pretty good. Any lender, they're just going to be looking at your credit, money in the bank for down payment and closing costs, and your debt to income ratio, your income versus your debt. That's it. Those are the three legs to the stool. That's what's looked at. And the money and credit, for the most part, generally isn't an issue. It's if there's going to be an issue, it's going to be the debt to income ratio. Hey, I want that $300,000 neighborhood. I only qualify for $250,000.
Yeah.
Because the student loans are
That's a
they're
big
killing.
thing.